months, John came down and said, Charlie, I'd like to talk to you about trading. You know, see, I rest and all that other stuff, but you've only done about 6 trades. And it was true. For the first 2.5 months I was down here, I didn't do anything. I came down, I was a former Harris banker, and I started in the bond pit, and I used to wear 3-piece suits to the Harris. When I came down here, I wore a 3-piece suit. I took off my jacket, and I had my vest on, and I buttoned my overcoat like this over it, and I stood in the pit. And then he goes 6 bid, and I go, yep. He goes 7 sellers, and I yep, 7 sellers. And about once a week, I couldn't stand it anymore, and I'd buy one, and I'd keep it for a day, and I'd get out of it. And it was the end of about 2.5 months. I'd been down about 2.5 months, and for me, the whole concept of scalping was incredibly tough. Just, I didn't know why you had to sell it when you bought 6s, you know, because I can remember it'd be 6 bid for 500, and 10 would be offered at 7, and all of a sudden Plaza would come in and sell 1,000 at 6, and sell 500 at 5 and 500 at 4, and the one lot that I bought at 6, which I thought was the greatest deal ever, you know, was a 3-tick loser, where I'd sell one at 7, and there'd be 500 bid, and before you know it, I'd take a profit on it and plug the hell out of it. I became a spreader. And that was back in the days when tax laws were different, and there was an incentive for people to use contract months other than the front month. I don't think we'll ever see those opportunities again. But yeah, we're going to talk about spreading. Okay. All right. Enough about choosing a pit. Does everybody know what pit you want to trade in now? Okay. Yeah, I'll tell you, if anybody has any questions about pits, individual pits, and you don't have anybody to ask, come and ask me, because I think I know people in most pits, and I can talk, you know, to you a little bit about individual pits. I think that's the best way to go. I would say this. I think anybody that comes into the bond pit during the day right now is looking up at that dog's ass, okay? I think the bond pit at night is an opportunity, although I understand the volatility is kind of come out of that market a little bit. But I think anybody that comes into the bond pit during the day right now is really asking for trouble. I mean, I think you're trying to climb a tough mountain. I guess the ways to do it, we can talk about that if anybody wants to handle it on an individual basis, but I think it's tough to start. Because like I said, it's on the monopoly board in there. And the man doesn't make the spot makes the man. Okay. Enough about pits. Okay, we're all commodities traders. We're in a pit. We got in there. You know, incidentally, when we started down in the South Route, a lot of you guys have heard these stories, but some of us were bright enough, I guess, to figure out that it really meant a difference as to what spot you stood in. So guys like myself came down for 18 or 19 months in a row at 2 o'clock in the morning so we could get the right spot in the bond pit. My brother came at 12 o'clock at night for 6 months because he was in a time war with another guy. So he'd get in at midnight and he'd be in his spot in the pit at midnight. I think eventually they made you sleep in the hallway and everybody would run in when they opened up the gates. So, you know, there's always been a premium on spots. Okay, anyways, we're commodities traders, we're in a pit. I'm not going to talk first about taking a loss or taking a profit because that doesn't mean anything unless you get trades. So here's what it's all about, okay? I'm in a pit. How do I get a trade? Over the history of the Board of Trade, there's been one group of traders that have consistently made money, and those are spreaders. Up until the bond pit, there was no such thing as a scalper who made money. And Johnny knows this, and I know this. When you were in the bean pit, and you were 6 for 100, and a guy sold you 100 at 6, everybody in the pit tested you. They made it 6 sellers, okay? And if you were 5.5 bid for 100, maybe went back 6 bid. But there was no such thing as a pit being a clearly defined 6 bid at 6.5 or 6 bid at 7. In the bond pit, it is clearly defined, as everybody knows. It's 6 bid at 7, okay? In the bean pit, and basically every other pit in the history of the Board of Trade, there was no such thing as a clear edge. So there was no such thing as a scalper or a scalp picker, okay? There were no successful scalp pickers in any pit. Everybody was a mini speculator and a mini day trader in every pit. And for the most part, those guys went bust, okay? The people that made money down here on a continual basis were spreaders. And they spread and they spread and they spread. And guys like me got started spreading. I was a one-lot trader who traded once a week. I went up in a cafeteria at noon and looked down at the pit for 30 minutes, figured out what they were doing, and traded 265 contracts the last hour of the day. And that's how I started the trade. And I was a 50-lot trader the next day because I understood what spreading was all about. People who spread are people down here that I think mature faster as traders, and at least in the old days, opportunity to make a lot of money. Now, because tax laws are different, there is no such thing as a spread, okay? There are guys in the middle of the bond pit that make money spreading, and if you're a note spreader or a knob spreader, if you're a knob spreader, you're a pure spreader. If you're a note trader, you have to know what the spread's doing because you have to take advantage of it when the opportunity presents itself. But for the most part, people in the financial instruments room who stand in those pits are not spreaders, but they are. Everybody's a spreader, okay? How do I get trades? I have to adapt the mentality of a spreader, okay? I'm a scalper in the bond pit. I'm not a spreader. What are you talking about, Charlie? Well, everybody spreads. Everybody that trades bonds from the outside spreads. Everybody that's trading in the bond pit spreads. Every order that comes in is basically a function of a spread. What does that mean? We are in the bond pit, and I'll talk about the bond pit and any other pit you want to pay individually. In the bond pit, we are spreaders. We're trading bonds, okay? But really, we're trading bonds against some other commodity. Now, as you know, the bond market, the futures market in bonds is about this big, and the cash market is about this big. So the most obvious relationship is, yeah, we're scalpers in the bond pit, and we're trading a futures contract, but everybody that trades against us into the bond pit is a spreader. Not everybody, but about 65% of the people that send orders in the front month in the bond pit now are trading against another contract, against another cash contract for the most part. Okay, so everybody is trading relationships. Now, I talked to you a little bit about how frustrated I was when I started out in the bond pit, and I'd be 6 bid at 7, but I'd say, God, why do I want to buy 6s? Well, I want to buy 6s because everybody else does. Okay, so what's the probability that I'm going to get a 6? 0. Okay, I want to sell 7s when everybody else wanted to sell 7s. So what's the probability that I was going to get a 7? 0. So how do you get trades? You get trades by, number one, being a spreader at heart. Let's take the bond pit because a lot of you are familiar with it, okay? I want to trade the bond pit, okay? What do I want to spread against? I want to spread against outside markets. Now, what does that mean? Okay, I'm in the bond pit trading bonds, okay? And I understand, everybody understands. If you don't understand, I'll explain it to you right now. If it's a big 6 bid, you want to buy 6s. If it's a big 7 sellers, you want to sell 7s, okay? If you don't learn anything else today, remember that, okay? Now, how do you get 6s and how do you get 7s? How do you get 6s when they're not quite as attractive as they were when 500 other people were trying to buy them? And how do you sell 7s when they weren't quite as attractive when 500 other people wanted to sell them? You are an offer or a bid in the bond pit against another market. Now, what that means simply is this. We follow other markets in the bond pit, okay? As you know, there are a whole bunch of guys that trade bonds that follow the yen, right? They're yenis, they're yen traders. When the yen ticks up, they're a kind of an aggressive seller in the bond pit. When the yen ticks down, they're an aggressive buyer. If we're watching the Dow that day, okay? If the Dow breaks, you know, we're an aggressive seller or an aggressive buyer, depending on how much it's broken. We watch oil. Today, at the end of the day, we watched oil a little bit. We did what oil did. If oil breaks, we're aggressive buyers. If oil rallies, we become aggressive sellers. Okay? How does that get you trades? I am not an advocate of stepping out when you're trading, okay? I don't believe that if a guy wants to trade and it's 6 bid at 7, the way you trade is you buy 10 at 7. Okay, now I got to trade on, great. I don't think that's the way to trade. I think the best way for me to explain this is brokers want to trade with winners, okay? They want to trade with you. But they really don't know what you want unless you are an aggressive bid or an aggressive offer, okay? Now, the hardest thing in the world, I think, is for a relatively new trader to step into a pit and be an aggressive 6 bid or an aggressive 7 offer when that person does not have a position on it. Because the bottom line is you just don't know that much about what's going on, and you really, you know, why do I want to buy 6s? Why do I want to sell 7s? You have to have a reason for doing it. When I was a spreader, I spread the middle month against the top month, okay? If I offered the middle month, I offered it at 20. How many you got at 20, Charlie? I look at the front month and see how many they offered at 16, which is what I wanted to buy. I got 420, okay? You're a new trader. Who gives a shit? I got 420. I want to buy the spread, okay? I was offering it, and I was offering it with confidence. When a broker had an order of 100, he came to you, okay, because he knew you wanted to sell 20s. There's nothing worse than being a new trader standing in a pit saying, well, 6 bid at 7, 6 bid at 7. I really don't know what I want to do. I really don't know if I want to buy 6s. I really don't know if I want to sell 7s. Okay? So a broker says to you, because well, let's face it, the 7, and he has 5 to sell at 6, and it's gold. Okay? That's not the way to trade, and that's not the way to get trades. To be a meek 6-bid at 7 is not the way you do it, okay? When you're in the pick, you want to offer 7s with confidence, or you want to bid 6 with confidence. Now,